Hi everyone. I talked Jen into staying a little bit longer. After we talked interest rates, I started asking her about down payments. And so she's kind enough to give us a breakdown of putting 20% down, putting 10% down, putting 5% down. So do you want to jump in and just give us a little breakdown of 20% down or why you would or wouldn't?
Absolutely. So, Sean, I think a common myth, right, amongst home buyers is that you need 20% down to get into a home. You actually don't need 20% down, but I think the main reason why somebody would want to put 20% down is to avoid private mortgage insurance. So basically, whenever you don't have 20% down or 20% equity,
Yep.
the bank is going to hire a private mortgage insurance company to charge you private mortgage insurance per month, right? And basically, this backs up the bank in case you don't pay or you default on the loan. Well, they're secured, right? So when you don't have 20% down, maybe you're more risky to them. And they have the private mortgage insurance company absorb that risk for them. But there are, other benefits, of course, right? Like the more you have down, the less your mortgage payment is going to be.
More affordable, more...
Yep. And you might actually get a lower interest rate, right? Because it's all about reducing risk for the lender. So a higher down payment presents less risk to them. So they might actually give you a better interest rate if you have a higher down payment.
All right, quick question then. So 20% seems to be the magic number. If someone puts down 25, 35,
It gets
50%,
even
does the
better.
rate get better?
The cutoff would be probably like 25%.
Okay.
Specifically, which I don't want to get too nitty gritty, but when it comes to condos,
Yep.
25% is the magic number. So a condo is always going to have a higher interest rate than, say, a single family home. If you can get 25% down on a condo, your rate is going to be the same as if you had 20%, say, on a single family.
Okay.
And clients really like that because it just presents less risk, so you're getting rewarded.
All right, so you did say you don't have to put 20% down. So if somebody doesn't have the deposit and they want to purchase a house, how low can they go and what are the benefits of actually putting lower money down?
So if you don't have 20% down, your life is not over. We can still help you buy a house, and we're happy to. You can start with as little as 3% down if you're a first-time home buyer, and this is going to be your primary residence. And let's say that you've already owned a home, but you want to buy a new home and you're going to live in it. You can do 5% down. So you don't even need 20% down for your second house that you're buying. As long as it's going to be your primary residence, you're going to live in there primarily. But a benefit of that is the obvious thing, right? Is you actually can get into a home if you don't have the money. We already know that one. But a lot of people, they might have 10% down or 20% down, but they just don't want to use all of their money. So they want to keep some cash because cash is king, obviously. They may want to use that money to improve the home that they're buying. Maybe they're buying a fixer-upper. Maybe they're investing elsewhere. Maybe they're, scared that now they have this big monthly payment, so they want to have extra cash reserves in case they lose their job or they have an emergency. So I would say just because a buyer doesn't have 20% down, it doesn't make them less qualified than somebody with 20% down.
So is there a downside or a risk to 3% or 5% down?
There's only a risk to the lender, not really to the buyer. And that's why the buyer is going to be paying private mortgage insurance. They're basically absorbing the risk for the lender to get the loan.
So you're putting less down, you're going to pay a slightly higher rate, and you're going to play PMI, but you're going to be able to keep cash in hand, potentially. Or
Absolutely.
if you don't have the cash, you're going to be able to get into a home. So you'll get your first home or your second home, like you're able to get into something.
Absolutely. Yes, exactly. And so in most mortgage products, right, private mortgage insurance actually goes away once you have 20% equity. So let's say you buy a home and the price increases like we've seen like forever in Massachusetts, right?
Never ends.
Never ends. Yes, always positive equity happening throughout the years. You can get rid of your mortgage insurance this way by increasing your property's value. You can also accelerate this by paying extra towards principal, making home improvements to increase the value of your property. What you have to do, your loan doesn't change. You just call the bank and get a new appraisal, and if you have 20% equity, that private mortgage insurance goes away.
So I've made my payments, and mathematically I say I've got 20%. I just call the bank. What's the appraisal cost?
Maybe like $500, $600.
Done.
Yeah, absolutely. And let's say you just, you are at that, it doesn't have anything to do with value, you might not need an appraisal.
Okay.
And that private mortgage insurance, it depends, what the monthly cost is. But I guess that would be another advantage of putting more down. Somebody that puts 10% instead of 5% is going to pay less in mortgage insurance than the person who puts 5% because, again, less risk to the lender. The more money you have in the transaction, the less likely you are to default on your loan.
All right. So you said once you get to 20%, I call the bank and they get rid of it, or do they get rid of it themselves at any point?
They do get rid of it themselves at 78%.
Okay.
Yeah, so it would happen automatically, say you forget or something like that. But usually, if you're working with a good lender, they should be keeping their eye on that for you, just as a, service, like a plus. We don't have to do it, but it is nice, and I want to help the buyer.
All right.
Yeah.
I almost understand it. So again,
He
if
does.
you
He
ask me,
understands
if
that.
you ask me, I'm still going to send you to Jen, but I almost understand it.
Thanks, everybody.
All right.
Bye.
Have a great day.